everyone, my name is Anna Smith and I am the broker owner of Plumar Realty, and today we're going to be talking about something completely different, and which is going to be a not such a cookie cutter lending. And for this I have invited my friend April, and she's going to be talking to us about how and when will it be appropriate for you to get a creative lending when sometimes you cannot fit in one of those cookie cutter lending programs. How are you, Miss April?
Good, how are you?
I'm doing good. Well, tell us a little bit about yourself and your company.
I am with Finance of America Mortgage. I've been here over 2 years now. I am the sales manager for the office and also a mortgage advisor. I've been in the business now for 26 years. It seems hard to believe it's gone that fast. And been originating since 2000. So seen the ups and the downs, and we're definitely in an up season right now with all of the low rates, so that's pretty awesome.
Very nice.
And so we were going to talk about the bank statement program and some other things that are out there.
Okay.
Bank statement program means it's for self-employed borrowers, or we do have a 1099, meaning that you're not a typical W-2, straight hourly person.
Mm-hmm.
So what we do is we take either the last 12 or 24 months personal or business checking accounts.
Okay.
We're going to take an average of all the deposits, and that's going to be your income, and then we're going to back off a certain amount of expenses. So whether it's 25% or 50% to help have that income so that you can qualify for the mortgage.
Okay.
So we'll do up to 90%, which is pretty awesome.
Oh, wow.
You have to have a 660 minimum credit score.
Mm-hmm.
And the interest rates are going to be a little bit higher, of course. You're going to be anywhere from 5 to 6%, and there are probably going to be points involved. However, it's that perfect opportunity for that self-employed borrower who writes off everything but the kitchen sink.
There you go.
So that's pretty awesome.
What other programs do you have that a person, let's say self-employed, so we have the bank statement program. Is there any other lending programs?
We have one that's a no income
Uh-huh.
program that basically, if you have a large amount of money in the bank, so I've heard it a million times that, I have all this money in the bank,
Mm-hmm.
why can't I qualify? So what we do is we don't take your tax returns, we don't look at you in any way on that aspect, but we're going to take your assets. So let's say you have $5 million in the bank, we're going to take your monthly loan payment.
Mm-hmm.
So it basically, we're going to times it times 60 payments,
Okay.
and we're going to deduct that from your assets. We're not going to take it from your assets, we're just using it for qualifying purposes. So it's not like you have to set the money in escrow or anything crazy like that, but we're qualifying you. So basically, if you have money in the bank, $1 million, and you divide that by 60, that's what we're going to give you for,
Oh, very nice.
to qualify for a monthly payment.
And that is if the person does not work, so he or she does not
Nope, he
have
can
a-
work, or he can work, he can be self-employed, so
Okay.
that's pretty awesome. Now that one's gonna have a lot higher loan credit score requirement. It's gonna be about 700.
Oh, okay.
And you are gonna have to have reserves left over, and there's some other little interesting things. We also have a portfolio select, which
I was going to ask you about that because you talked to me about the portfolio selected a few weeks ago.
Yeah, so
talk
we
to
have
us about that.
a couple of things that fall under our portfolio product. One is if you have just come out of bankruptcy or foreclosure in the last 2 years, then you can qualify for that. Again, you're going to have, I want to say, a 660 minimum score, and your credit is going to have to just have that significant event that happened, and then you're going to have it cleaned up for when we go ahead and to do the financing. Right now it's 3 years with FHA, and it's 7 years on conforming for those events. So that's why we have developed this portfolio product. We also have an investor cash flow or an investor fix and flip. So if you are a brand new or an experienced investor who wants to get into buying homes and fixing and flipping them, we have a program, again, a 660 middle score. We're going to take your assets. We're going to look at your experience and how much money you have in the bank. We're not looking at retirement, we're only looking at liquid.
Okay.
It has to be sourced and seasoned. A lot of questions come to that. But so let's say you just sold a house that you inherited and you have $100,000 in the bank. We'll actually give you up to 5 times that amount on what we call an equity line. It's not a true equity line. You can't just write a check. But once you get approved, you don't have to verify that 100,000 anymore for at least a year. So we can then go out and purchase a new home. We can loan you 85% of that purchase plus 90% of the cost of the rehab. So that's pretty awesome. So not very many lenders do that. There's no mortgage insurance, of course, on that, and there's no income verification on that. So what we're looking at truly is what that before value is and then what that after value is, and we're going to loan you money based on that. And that's with no experience. Now if you have experience, then of course we're going to be able to, you can have more than one project going at once. You can have up to a 25 unit project if you wanted, which is amazing. You know that as soon as you hit 4 units, you fall outside of a commercial. So we actually specialize in over 4 units. Then we also have within that program, we have a single rental loan. So your exit strategy, if you wanted to keep that project, is that once you did your rehab, you could then refinance it into a single loan. And that single loan, again, is only going to verify what that income producing property might be, not on what your income is. So it's a great product.
Now, those loans, they do have a higher interest rate, correct?
Oh, yes. But the single loan is not going to have much higher than conforming right now. So as long as you have good credit, you know, as long as you have the reserves, then the interest rate is going to be similar to what it would be for conforming. We also have a portfolio product where we can put up to 10 properties into one loan. So let's say you're an investor and you're cash poor right now, which is happening. So you have a bunch of properties and they're all rented and they've all been rehabbed. We can pull cash out of those properties up to 80%, and then we can start your equity line based off of, you know, the cash that you pull out. So there's lots of creative things that we have. We also have a construction to perm loan that falls under this. So if you are a new builder or an existing builder whose lines have been cut off, which has happened in the last year, a lot of the new construction financing has been hard to come by, we'll actually loan you the money. Again, we'll loan based on the lot that you own. We'll pay for all the horizontal costs, meaning the cost to build the property, not the cost to develop the neighborhood, but the cost to build the property. And again, those same ratios are going to come into play, like 85% of your cost to build, 65% of the land. I mean, so it's really kind of awesome.
Is this for a single lot or for a multiple lot?
Whatever we will talk about anything. Yeah, we'll talk about doing a whole subdivision. We'll talk about doing a multifamily property. We'll talk about just building individual single family homes. So it's great, especially for that new contractor who cannot get financing anywhere else, but needs to build that spec home so that they can hopefully sell more.
Oh, very nice.
Yeah, and again, all rates are going to be, I'd say, anywhere from, you know, the high 3s to, on our fix and flip, they can honestly be to the high 14s. Now, the fix and flip line, again, is a short-term financing. It's 12 to 18 months. And even if you go to hard money, you're at 65% and your interest rate's probably going to be about the same. So better rates. I have one lady who owns about 75 properties, so it's not her first rodeo. She's liquid about 500,000, and her rates are in the low, I'd say the low 5s. So, and not paying any points. So that's pretty awesome.
That is very good.
There's no prepayment penalties with the fix and flip. We call it a mandatory 3 months that you have to pay the interest on it. They're not calling it a prepayment penalty. The portfolio and the single loan both are going to have prepayment penalties. Now in lending, that product is probably going to be the only thing that's going to ever have a prepayment penalty on it.
Can you explain to the people that are watching us what a prepay penalty is?
So if you pay more than 20% of the principal and at any given year, then you could have to pay a penalty. Basically, it's a percentage of the interest that would be due for that year. So it could be staggered. So the first year could be 5%, the second year, 4%, and then down to where it's just either nothing or 1% for the life of the loan. So usually I try to gauge what your exit strategy is for a property, what your goals are as an investor. Because if you want to buy it, only keep it for a couple of years, then we need to make sure that that prepayment penalty is gone by the time you want to exit.
Yeah, and then another good thing that you do is that you're gonna sit down with them, find out what they want, and then put them in the right.
Usually my investor products, I typically on anything conforming or FHA or government, I can do that over the phone. That's not a big deal. We can do it by email, we can do it by DocuSign. But when we start talking investment stuff and we get into bigger portfolios, then I'm gonna probably sit down with you and we're gonna have a heart-to-heart conversation, goals, aspirations, what you're thinking, so that we're on the same page and that you're not surprised. When I do the investor stuff too, I always hand out the guidelines, the matrix, because there's a lot of idiosyncrasies with these products and I want everybody to be aware of it.
Very nice. So. Okay, and can anyone reach out to you?
Anyone, anytime.
Okay.
Yeah.
Now, are you on? Do you have of course, an email and an email address, a Facebook page, and all that stuff?
Yep. April Burridge King, and then my NMLS number is 379572.
Okay.
And then my email is april.king@financeofamerica.com. And then I have a website called approvedbyapril.com, and you can actually apply for a mortgage on there.
Oh, that's real cool.
And upload your documents in a secure setting. So
very nice. Well, I'm going to put all of her contact information at the end of this video, so stay all the way up until the end so you can write everything down, give her a call, and find out how can she help you with your financing, creative financing programs that she has available. And then call me and I'll find you that one house or that one property, that 20-unit building that you want to rehab.
I don't suggest that for the first one, but let's baby steps, single family duplex, and then maybe we can hit the 25-unit one. But yeah.
Very nice. Well, April, thank you very much. It was amazing your little chit chat from today.
Thank you.
And I will talk to you guys soon. Stay tuned. Bye.
Bye bye.